after the morning tea break, Carawine Resources is currently drilling out its high-grade Hercules gold prospect in the Tropicana region of Western Australia. To tell us more about this and Carawine's other gold, nickel and copper exploration projects, we're joined by our Managing Director, David Boyd. Welcome, David.
Everyone, great to be here for another year. Thanks to the organisers, of course, and thanks for everyone. I'll be able to share the Carawine story with you. So, well, let's get into it. There's some key stats on the company. I reckon we're great value. We're plenty of money. Just late last year, we raised 4.9. We had another 300,000 to that, thanks to Rio Tinto, who completed a share subscription as part of the JV deal in the Patterson. So importantly for us, it means we've got the resources to do what we want to do, what we like doing, which is drilling holes and finding things. The board, key management there, you can see we're geologist heavy. We reckon that's right for an exploration company. So let me tell you a bit more about that. We're explorers. Our focus is gold, and we're mostly WA based. We've got a project in Victoria, and we're actively exploring major mineral provinces. The focus at the moment for us is our Tropicana North area. We're about 60 k's northeast of the Tropicana mine in northeastern goldfields. We've got a number of advanced regional targets there, early stage. We're drilling away at Hercules at the moment, which we talked about this time last year, just before putting out some great results. So we believe this area has great potential for a major new gold camp. While we're focusing on that, we've got up to $16.9 million worth of exploration spend being managed by others, including Rio Tinto, Fortescue, IGO, in the Fraser Range, Patterson. We've also got Black Canyon, who are here at the conference as well, earning into some manganese ground in the East Pilbara. So for us, that works really well. We're doing what we like doing, which is exploring our ground, our 100% and majority owned ground, and we're leaving the others to give us a ticket in that other lottery, which is exploration. And we're our value uplift will come through exploration success, so through discovery, and we've got the means to do that. And we're drilling away, so we're expecting some pretty good news flow to come over the coming months. So where are we? We're in the Patterson, we're in the East Pilbara, we're in the Tropicana belt, and we're in the Fraser Range, and we're in Victoria. Tropicana North, it's a 90% JV, Carawine, 10% PTY Ltd called Thunderstruck. We bought into that project late in 2020. Hit the ground running with some drilling and got some great numbers out of Hercules, which I'll tell you about later, as well as generating a number of good targets. In the Fraser Range, we've got some of our own ground, 100%. We're chasing nickel copper targets there, magmatic nickel copper. And then, as I mentioned before, our JV partners earning into other areas. Jamison, I won't talk a lot about. It's been hard to get to Vic in the last couple of years. But nonetheless, we're happy right now that Hercules is our focus. We think that's a better bet at the moment. And I mentioned what we're up to drilling-wise. So we have been drilling since sort of late mid last year through in the Tropicana belt. Our JV people have also been drilling. For the next 6 months, we've got 2 rigs happening at Tropicana North right now, Diamond rig at Hercules, and RC rig drilling out our Big Freeze prospect. We're going to do some ground EM in the Fraser in a month or two, and IGO will be drilling a conductor just south of Nova in the next month or so. Fortescue have got some targeting coming up, and then as we get into the rest of the year, especially that northern field season, we're expecting Rio and the West Patterson JV, Fortescue to hit the ground, do their work, while we're continuing with our Tropicana stuff. And then beyond that, it'll be about follow-up, new targets, target gen. So we've been busy. We're going to keep being busy. I mentioned, our value is going to come from discovery, and as we know, discovery comes from drilling holes. So this is Tropicana North, map on the right there. So you see the Tropicana gold mine right in the middle. We're off to the northeast. The two tenement colours there, the blue is our Thunderstruck JV ground and the red's Carawine 100%. And you'll see Hercules in the middle there on our Neil tenement. That's where most of our effort's been. Those other tenements, much of those other regional tenements have just been granted in the last 3 to 6 months. So we're looking forward to those filling our pipeline with some early stage prospects, certainly down at Python, Pleiades, these places. In the meantime, we've got our own prospect group around Neil. The tenement's been granted for a while now that we're getting into. So lots of prospects, range from advanced to early stage. And we're after large gold deposits and more than one. So we're looking to see another camp up in the Tropicana. The other point I'll just make is, this area, people may know the Anglo discovery story of Tropicana. I'll talk about that. And then a company called BDL Resources were up here as well. If you like, we've got a great database of regional air core holes, regional geochem to build on. So we're sort of second, third on the ground out here, and so we're really looking to build on that. The prize, of course, wouldn't everyone love Tropicana? It's almost 8 million ounces in 2012, their resource. I've highlighted the two key points. Discovered following up the 3 ppb gold soil anomaly, where strip profiles out here, we don't get big supergene upgrades and dispersion halos. But when you see gold, it's anomalous. So if you're getting gold, then you're away. The other point I like to make is looking up at Boston Shaker at the north there. These are deposits dominated by shoot geometries. Some of those shoots have under 100 metres of strike when you're looking above 20 gram metres, and they go down a long time, so down plunge extensive. So this is the model, and that's what we're chasing, and it's what we're using to chase. And we see some similarities in the geometry and some of the geology from Tropicana at Hercules. So here's the one we've been working on for a bit now. We're drilling out there now. Diamond rigs on site, has been since about July last year, plugging away. That's a long section. I'm showing pierce points with accumulated gold, so gram time metre intercepts. The pink is plus 10 gram metre contours. Over about 350 metres strike from about 35 metres below surface, that's the cover, to about 250 below. So we're drilling that out now. We're looking for the extents. It's high-grade nuggety gold. It's in laminated veins in a shear zone, subvertical. We're chasing the high grades. We've still got a bit to do here, but so far so good. We're chasing it down and drilling deeper. Some of the grades there showing just fantastic results. And we're now, let's go back again, wrong button, just focused on teasing out this high-grade plunge, which we think comes from the top here down. I'll make the other point, there's just sand on top of us here, so there's no pits, there's nothing around. When we get into that early stuff, if we get into it, then it'll be straight in. And there's some very good grades, so we like Hercules a lot. Big Freeze, this is where the RC rig is right now. It's a prospect which we developed up late last year, following up some historic work. In the centre there, we're seeing this 900 metre long plus 1 gram anomaly in drill holes, in pretty wide space drill holes. So thinking, and that sits within a much larger 10 ppb gold anomaly in drill holes, which parallels that Hercules shear zone. There aren't too many almost kilometre long gold anomalies out there going above a gram. we really like Big Freeze while we're got the RC rig there now. It's got about a 3 to 4 week program. Started a few days ago. Expect to have that finished early March, and then results to follow. So certainly looking forward to that. And then as we go more regionally into that Neil tenement, so just stepping back a bit, Hercules up the north there, Big Freeze down the south, Hercules shear zone, our detailed aeromag there. From that, we've generated a bunch of target areas to follow up with air core. So you can see we're working away at Hercules. We really like that. We're bringing Big Freeze up to the next stage, and we're generating more Big Freeze type targets as we come along with the air core. So we've got this, obviously, the exploration pipeline mindset at the front of our mind. We want to find more than Hercules in this area, and the way we'll do that is by generating targets from drilling. Briefly into the Fraser Range. So we've got some ground in the central Fraser, just near Galileo's Lantern prospect. We've got what we think from some geochem and mag interp, some buried mafic, ultramafic intrusives. It's a nice, simple and straightforward option here for us. We do some ground EM. We get some conductors, we'll poke a hole into it. That's the plan. There's also some gold flowing around the Thunderstorm project just to the south. A JV with IGO and Rumble has come onto our ground. So we know about the Fraser Range. We've been there a while. All the green tenements on that map JV'd with IGO. So we know the area. We like the area. It gives us a bit of an option for a win in the nickel copper space as well. Yeah, a bit more detail on Big Bang. So, you know, we know what we're targeting here. It's the mafic, ultramafic complexes. Hopefully they're dirty. Hopefully they've got sulfides in them. And hopefully they throw over a conductor. Pretty straightforward for us. And like I said, moving loop plan this half. So now just a bit on where we, you know, not really sit back, but happily sort of watch others earn in. We've Carawine, we're ground generators. We love picking up ground in good areas. We hate letting it go without seeing explored. So for all these areas, the option for us was where the commodity didn't quite fit or the area didn't quite fit, was to do deals that prioritised on-ground exploration. So there's commitments for drilling up front, for in-ground spend up front. And all up, if they reach their earning stages, then we'll see almost $70 million spent on our ground, with retained interests between 20 and 25% in all of these. So, you know, it gives us a big piece at the end if they're onto something. We think it's a great way to be exposed without using our balance sheet, obviously. And you'll see where we are there. So we're into all the other metals with this stuff. So nickel, copper in the Fraser Range, copper, gold in the Patterson, and manganese in the East Pilbara. Just some highlights of what our partners have been up to. Rio Tinto in the West Patterson, just sort of I suppose we're about 50, 60 k's southeast of Winu on the other side of the Kali embayment. They finished an RC program at Red Dog late last year. We're waiting on those assays. An Airborne EM Excite Heli-borne EM survey, a Batten, built on some targets we already knew about, gravity mag targets, so e.g. Havieron, and two pretty impressive EM anomalies from the Excite survey that Rio completed just late last year. One called BM001, which is a true pimple type anomaly in ground, which is not conductive at all. They've got a nice, neat blip, which everyone liked as soon as they saw it in the raw data and beyond. Fortescue in the East Patterson, much earlier ground, not as much work done, so they're building up targets, including a big V10 survey they did, target Gen. We'd be expecting some more drilling by Rio and Patterson and Fortescue in the Patterson this year. IGO, where they know about the Fraser Range. Don't worry about that. So just south of Nova is our Red Bull project. It's in joint venture with them. They're managing and funding exploration. A couple of holes drilled late last year at 2 conductor targets. The northern one, RBB, hit the graphite. The southern one didn't hit a conductor, so they'll be testing that soon. AuTECO, manganese, great exposure for us, Black Canyon guys. So we're talking tomorrow, so you'll hear that story. Jamo, like I said, porphyry hosted gold, related systems. This is where Carawine started. We'll go back there once we can get into Vic and operate happily. But also while we not focus on Hercules and Tropicana, which is the current number. So that's us. Thanks, everyone. As I said, great projects for us, good exploration regions. We're drilling away. We've got our own ground. We see great potential. And in the meantime, we've got our JV partners working away in other provinces. Thanks for your time.
Helix Resources is a highly active minerals exploration company focused on making discoveries at its copper projects located in the Cobar region of central New South Wales. We're joined by Helix Resources Managing Director, Mike Rosenstreich. Welcome along, Mike.
Thank you very much, Jerry. Helix Resources is focused on finding large-scale, high-grade copper deposits in the Cobar area. It's not a story of diversity. That is our core project focus. I started just over a year ago, and the new team that I've put together, we are all in on finding copper in Cobar, and hopefully through this presentation, you'll get a sense as to what's driving that enthusiasm. I'd like to think it's a unique opportunity for investors to have exposure to copper discovery success on the ASX, given our sole focus on Cobar copper. Cobar has a long mining history, high-grade copper, gold, and base metal deposits. We've got a very strategic land position there, over 2,000 square kilometres, and in the centrepiece of our project profile are 2 mineral resources, Cambalago and CZ. We've had recent success drilling, particularly at Cambalago, and I'd like to talk about that a little bit more. But importantly, we have an emerging project profile from systematic regional scale exploration work. We've got a very experienced team who have joined the company recently, supported by an experienced board. And there's a wonderful copper price outlook. Last week, copper breached $10,000 a tonne. So this is the Cobar region. It's elephant country. As you can see, the likes of Airborne Resources on their Craton operations have been operating there for around 30 years. On the other side of the region is Glencore's CSA mine. 50,000 tonnes of copper contained in concentrates. They've been churning that out for about the last 20 years, and that's that mine's 3rd phase of production. And then you've got a range of other producers, Aurelia at their Peak and Hera mines, and emerging projects such as Peel Resources and potentially Helix as well. So this is a map now focusing in on our 2 tenement blocks. We have the eastern and western block. And on those tenements, we've identified 3 mineralised trends. The Rochford Trend in the middle there, number 1, the Carawine Trend to the east, and in the earlier stage, Mineralization Trend on the other side. Now, just as an aside, those colours there represent a Airborne V10 survey that we flew early last year, and it demonstrates our commitment to doing regional scale exploration to generate the pipeline of opportunities to advance through to resource definition work. Last year was very much about gathering data and getting ourselves set up, understanding the opportunities. This year is about picking up the pace, and we're very much focused on increasing that copper inventory and being on a development pathway. So let's have a look at the Rochford Trend, where we've had some recent news come out. What are we looking for along this trend? We're looking for large-scale, high-grade copper deposits, such as the Cobar style of deposit. These generally have very small footprints, but extend vertically down for hundreds, sometimes thousands of meters. They tend to be high grade and they tend to occur in parallel lodes. And I've got an example there from the Glencore CSA mine where you can see all of those attributes, particularly the parallel lodes and that tremendous vertical extent. And this is a wonderful discovery to potentially make this, the high grade. It's one of the highest copper grades, copper mines in the world, highest grade copper mines in the world. So if we have a look at the prospects along that Rochford Trend, we have the advanced Cambalago project in the middle there. It's got a resource, 1.5 million tonnes at 1.2% copper. And I'll show a little bit more about that shortly. But up and down along that 30-odd kilometre trend, we have a variety of regional prospects which are emerging as well. And then we have that earlier stage Mariola trend to the left. So having a look at the Cambalago main zone now, this is a long section through it, and we have here a grade metre plot, copper times metre percents. And what it shows is the resource shell in that light pink shading, about 400 metres north-south, about 200 metres vertically. And then our last year's drill intercepts have been highlighted beneath that, which includes 18 metres at 3.4% copper, 100 metres beneath the bottom of the resource shell. And then in January, we announced that hole 6 also intercepted some massive copper sulfide mineralisation, extending that mineralised zone down another 60-odd metres. So we seem to have this overall copper lode within which we're defining a higher grade shoot. It's open to the north, it's open at depth, and we are drilling here right now. We make a lot of announcements about visual copper results. The reason is because copper sulfides, for example, brassy yellow, are quite distinctive visually, and obviously it's material to report those things. And that's what it looks like. That's actually from our recent RC drilling. So this is a plan view, and on the right-hand side is a plan projection of that main lode mineral resource, the main Cambalago lode. And what you can see there on the left of it is in red where we've intercepted significant zones of copper sulfide mineralization. So the COBAR model is starting to stand out as we define parallel lodes to the west. Likely 2 lodes at this stage, open-ended to the north and defined by several RC holes over at least 100 metre strike extent. And as I said, we have diamond drilling ongoing in this area right now. If we take a step backwards and zoom out along that Rochford Trend, in the middle of this map, you can see the shaded area is the joint venture that we have with Eris. It's a 70-30 JV. We manage it. We have 70, and we have a terrific collaborative relationship working with Eris on this. And in the middle there, you have that greater Cambalago project area that I've just shown you the map of. But to the south, we have the Caballero prospect. Hasn't been drilled since 2013, when 2 scout holes hit significantly anomalous copper intercepts of 33 metres at over 2,000 ppm. These are not, that's what scout drilling does. It's looking for anomalies or confirming anomalies, and they were hit, but they were never followed up. And then when we've come along early last year and flown the V10, it lights up underneath these anomalies and is really important in helping us rank and prioritise these regional prospects. Similar situation to the south, that Bijou prospect on 100% Helix ground. Very strong surface geochemistry, strong V10 response. Again, 2 scout holes, highly anomalous, not followed up. And then to the north, the Boppy Broken Hill, no drilling, but again, strong geochem, strong V10. So you can see there's a lot to get on with here in terms of looking up and down that Rochford Trend for more copper deposits. That's what the massive copper sulfide looked like in hole 6 that I referred to earlier. And that is why we are going to spend the majority of our exploration dollars in this area over the next 3 to 6 months, doing a range of drilling and looking at those prospects that I described. Now let's move to the eastern tenement block along the Carawine Trend. What are we targeting here? We're looking for what we refer to as Triton style deposits. These have a slightly different geological setting to the Cobar style of deposits mentioned earlier. They also have a small footprint, but a very extensive ribbon-like geometry down plunge, as you can see from the two long sections I'm presenting there from Eris's, Constellation and Triton ore bodies. On the very right-hand side, I've got a long section from our CZ resource, and you can see the similarities in the geometries and also some very good copper grades down that plunge. And it's worth reflecting that Eris's Triton operations have been there for 30 years, making about 20,000 tonnes of copper every year. So these are very significant mineral deposits or mineral camps. So this is that eastern tenement. You can see that recently with those yellow shaded areas, we've increased our land holding there to make sure that we capture opportunities identified from the regional VTEM near boundaries. In the central southern part of it there, we have our CZ deposit. That's 2 million tonnes at 2% copper and a little bit of gold. And we also have recently acquired the Homeville nickel cobalt resource. We did this with an opportunity to rationalise various royalty and joint venture interests, and we picked up this deposit along the way. It's a high-grade nickel cobalt laterite project. As well, up and down that Carawine Trend, we have a variety of emerging regional prospects, and you'll note to the north, that's the Triton or Eris's Triton operational hub, right along the northern strike extent of this Carawine Trend. Having a look at the CZ deposit, in plan view, we have a zone that plunges from the left to the right down to the southeast, and you can see over 1,200 metres, and you can see with some of those assays that I've listed on the right-hand side there, it's a genuine high-grade copper sulfide deposit, 14 metres at 4% copper, 12 metres at 5, 4 metres at 5% copper. It's a really significant mineralised zone. In our recent drilling late last year, we've also identified new shallow high-grade oxide zones, particularly to the southeast there, where we've got 7 metres at 2.6% copper and 7 metres at 2.8, and remains open to the southeast. So there's a lot of work to get on with here. At Colorado, most of our work will focus on generating and advancing more of our regional prospects, as well as reassessing and doing metallurgical work on the CZ deposit itself. I mentioned the Homeville nickel cobalt deposit. We're really looking for external funding or an investment partner for that, but there's a fair bit of attractive opportunity there, given that we have other regional, very high tenor nickel cobalt intercepts that could be incorporated into quite a significant nickel cobalt project, but that'll be a sort of a side project. So in terms of our pipeline and our work, I'd have to be candid and say that I think all of our team is a little bit dissatisfied at the pace of work we were able to achieve last year. We're picking up that momentum, and I think now, given that we've made 2 significant announcements this year already, with this workflow, which focuses on both our advanced opportunities and our regional prospects, we expect a very solid, busy field season, much greater momentum, and lots of news flow coming out of that. So Helix, it's been listed for a long time. Our current share price is around 1.6 to 1.8 cents. It gives us a market capitalisation of only $20-odd million. We've got a reasonable amount of cash left. One of the things that we like to do, part of our strategy, is to stay well funded. It enables us to do systematic, methodical work to well-based technically. Last year, we built up the team. We've got Gordon Barnes joins us as exploration manager and Megan Hamblin as CFO. So we're all new to the company, supported by a very experienced board. In terms of the share register, it's wide open. The top 20 hold less than 30%, and our major shareholder is Yandal Investments. And I think that share price graph there shows the excitement when you hit massive copper sulfides. But if you don't keep up the pace of that exploration, I guess interest wanes and your share price wanes, and therein lies the opportunity for investors. And the opportunity is to back a group that is all in on finding high-grade copper in Cobar. All their pieces are there. Great neighbourhood, advanced projects to get on with, a developing pipeline of regional projects in an area that's been underexplored, a focused and skilled exploration team, all underpinned by this wonderful positive outlook for the copper price. Thank you very much.
Technology Metals Australia is developing the world's next large-scale primary vanadium mine in the Murchison region of WA. The company also has downstream ambitions towards electrolyte production for vanadium redox flow batteries, an important future energy solution for on the journey to net zero. MD Ian Prentice is here to present the Tech Metals story. Welcome along, Ian.
Thank you, Stewie and the team from Vertical Events for giving me the opportunity to speak to a crowd in person, and of course those online who are viewing as well. It's great to be here with you. As Jerry mentioned, we're going to talk to you today about our vanadium development project, and also give you a bit of a taste of the importance of vanadium in our future as we move towards, I guess, net zero and reducing our carbon emissions. And vanadium has got a very big part to play in that. All right, this is all lodged on the platform, so the disclaimer is available at your leisure. So why invest in TMT? Critical minerals in a tier 1 jurisdiction, developing a vanadium mine with a bit of titanium on the side up in the Midwest of Western Australia. Murchison Technology Metals project. It's a large resource, high-grade resource. We've completed a feasibility study on I guess the larger part of that, the Gavinintha project. We're in the midst of putting together an integration study, bringing in our high-grade value-added Yarrabubba project into the study. Lowest cost quartile, really important, obviously, in a long life project. We're currently looking at plus 20 years of operations up at the Murchison Technology Metals project. Importantly, we've also got, I guess, a really good engagement with the market around offtakes, and both in steel and in the battery space. Very much part of the energy solution. These vanadium is going to be a key player in very large, long life, long duration batteries, the VRFBs, and we're very engaged in being part of downstream processing of vanadium into electrolyte to be able to really feed in and support the growth of that battery market here in Australia. Nationally significant, obviously critical minerals, CMFO, all the engagement you need with the federal agencies to develop a project like ours. Quick snapshot on the corporate overview. We've been listed since late 2016. As you can see there, we've got, as of December, we had $21.7 million cash at bank. We completed a $20 million capital raise late last year, which was cornerstoned by RCF Fund 7. So we were very pleased to have RCF come onto the register, sitting with an 18% holding in us. Currently got 56% of our register held by the top 20 shareholders. So not many shares on issue, and a whole bunch of that is held in some very firm hands. So a really good leverage for news flow. But we're only sitting at 69 million market cap, EV of about $47-48 million. And I'm sure I'm going to demonstrate through this presentation that there's very, very significant upside to all of that. Board and management. So Michael, myself and Sonu were the founding directors back in 2016. Jackie Murray is a new director who's joined us post the capital raise. Fantastic addition to the team. Brings a lot of experience and a real focus, I guess, on the ESG components as we move through development into the development of our mine and beyond. And we're also very pleased that David English has rejoined us just earlier this year. David was very much involved in the feasibility study for Gavinintha back in 2019 and 20. He comes back on board beginning of January, actually, beginning of this year, as our Chief Operating Officer, very much with a focus on building a mine, implementing our project. David's a very well-known builder of projects. He was very involved in Degussa for Samvire and Nova for Independence Group, and also spent a couple of years as General Manager Operations at the only significant previous vanadium producer in WA at Windermurra. So fantastic wealth of experience that he brings to the team. David and the team and myself will be available at our booth later on for a chat. So booth 31 around the back there. So please come around and have a chat when you can. Obviously, ESG, very, very important. We're going to be in this project for a very long time. We're going to be multi-decades operating in this area. So very much investment in both, obviously, sustainability of the environment, working with the local community and across the governance, and also the credentials of vanadium and what that's going to bring to the project, to the community and to the globe, all part of our ESG credentials. So the strategic plan, I guess it's all about, as I say, producing low cost, high purity vanadium to feed into the battery market, but also feed into the steel industry. Vanadium is still predominantly used in the steel industry. 90% of vanadium goes into steel. Some metrics in there about the really significant emissions reductions you get by adding a small amount of vanadium to every ton of steel you make. So we can, again, talk a bit more about at the booth, but it's a massive contributor to emission reduction over time. We'll be adding a bit more vanadium into your steel. But the batteries are, I guess, the real growth engine we see in the midterm, very large scale, long duration, stationary storage, based on vanadium as the electrolyte in these things. We've seen a really good run up in the vanadium price of late. We're now sitting now at about $10.50 a pound in Europe. It's really driven by, I guess, a tightening of the market. China dominates about 50% of supply, 50% of the consumption. They're using up every pound that they can produce at the moment. So the rest of the world is scrambling to get supply. So we've seen a really good run up in Europe, back, as I say, over $10.50. And you can see there, based on our DFS numbers, that's a very, very significant cash margin for every pound we produce. Won't dwell on this too much, but I guess some really key things. As I said earlier, long duration batteries, very large scale. They're designed to be industrial applications, designed to link to renewable energy, big production farms. The energy storage doesn't degrade over time. These things will last for 20 years with about to store and release the same energy over that whole period. Very safe. They don't have the thermal runaway issues you have with some other energy storage applications. So it's a liquid electrolyte, so you don't have any fire risk. And sustainability. So what happens is the vanadium that goes into the electrolyte is near on 100% recyclable. So at the end of the battery's life in 20 years' time, you can take that electrolyte out, extract the vanadium, use it again in further electrolyte or into the steel industry. So fantastic opportunities there. We're very much embarking on being part of that downstream process. We've got a partner out of Japan called LE System. We've got an MOU in place with them to look at developing our own downstream electrolyte business here in Western Australia and broadening that onto the East Coast, and very much about being able to produce the most cost competitive vanadium electrolyte in the world to support development of our own industry here in Australia to roll out these VRFBs to support big industrial applications. Onto the project, Murchison Technology Metals project, as I said before, consists of two sort of sub-projects. Gabanintha has been the larger footprint, the larger resource, done most of the work on that project from a feasibility point of view. And then Yarrabubba is our satellite deposit that is now becoming quite important in the development and integration of the projects. I guess in bold at the top there, 80 million tonnes at 1.1% V2O5. Putting that a little bit into perspective, current pricing, that's about $350 per tonne of contained vanadium. So pretty valuable commodity as we stand. And 50 million tonnes of measured and indicated resources, convert that to reserves, and we've got over 25 years of mine life. So as I said, multi-decade operation. We're going to be out there for a very long time. Some numbers around the MPVs that came from the Gabanintha DFS. Obviously, we're in the process at the moment of doing an integration study, bringing those two projects together, so that'll all get refreshed. Integration study on track for mid-22 delivery. Key for Gabanintha, permitting is very much advanced. We've got all our mining leases approved. We actually lodged our environmental scope of ERD, our review document, last Friday. So really well advanced on the process with the EPA on getting that first stage of environmental approvals in place to actually develop the project. On to Gabonintha itself, and this is extracted from, largely from the feasibility study. So you can see all the infrastructure in place, all the design, all those metrics around the costs and really important, $4 a pound versus currently $10.50 on the market. Very large revenue. That's based on a 16-year mine life. As I say, we're going to be looking at something more like 25 years. So life of mine revenue is going to be quite large. Shallow oxidation, really, really important. I won't talk too much. I've only got 7 minutes left and I could talk about that for 7 minutes, but really, really important. Shallow oxidation profile. When you're looking at these projects, that's a key parameter for processing. So we're very fortunate to have that shallow oxidation profile at both Gabonintha and down at Yarrabubba, and that makes a big difference in our cost of operations and also in our capital cost. Premium purity product, again, very, very important when we're talking about batteries. So we're going to be delivering something akin to 99.5% purity. Most production globally sits around 98%. So if we can continue to deliver that really high purity product, it's going to be very, very attractive into the battery space. We'll move on to Yarrabubba itself. So I guess somewhat the new kid on the block. We've known about it. We've had resources down there pretty well since the beginning, back in 2017, 2018, when we first started our drilling programs down there. It was never included in the feasibility study. We focused on Gabonintha and we had this little satellite that we bring along later. We've been putting a lot more effort into that over the last year or so, and that's really elevating through the process. You can see there, again, a large high-grade resource, 19 million tonnes at 1.1% in the high grade. The pink zone, that continuous pink zone on the right hand of that cross section is the high-grade layer. That's consistent all the way through both Gabonintha and Yarrabubba. Fantastic geometry for mining, really good widths and grade. And as I mentioned before, that's sort of 1.1% is about $350 per tonne. So if you've got 22 metres of that, it's pretty attractive. So same geological sequence as Gabonintha. So from a metallurgical point of view, there's a lot of similarities. The big difference we see down at Yarrabubba is we actually can extract a titanium product, a byproduct from our waste stream. So when we produce a magnetic concentrate as the first step, our beneficiation step in the process, at Yarrabubba, we produce a high-grade magnetic concentrate that goes on to be processed and extract the vanadium, but we also produce a titanium byproduct. And so that's going to be a really nice value add to the project as we move along. And again, in bold down the bottom there, very shallow oxidation profile. So it's again, very, very important for the operating costs and the whole metrics around this project. A lot of words on that slide. This is what we're doing right now. So integrating Yarrabubba into the feasibility study we've already completed. So it's integration study, bringing it all together. This map there shows where Yarrabubba sits, about 20 kilometres to the southeast of Gabonintha. Again, highlighting that global measured and indicated resource, a really large, high-grade position that's going to support a long mine life. We believe Yarrabubba's got a really good scope to bring our operating costs down, bring all those metrics down, which should have the positive impact on paybacks and overall risk lowering for the entire project. I won't go through all those work streams, but really we are doing the mining side, we're doing the met, we're doing everything we need to do to understand how exactly Yarrabubba fits into what we've already done for Gabonintha. We've already done all the detailed, all the engineering work to feasibility study level. We're now in the process of how does that exactly fit into that process, and where does it fit? What do we mine first? What goes through the plant first? And how does that get staged? And then really going through those next few steps. We're part of that process. We're going to update our ore reserve. So we'll have a new ore reserve out mid-year, which will be the combined ore reserve. And as I've said earlier on, that's targeting to have that integration study completed by the middle of 22. Some really good engagement with a lot of partners across all the areas, key areas for development of a project. We've got lead agency support, WA government. We've got really good support from with conversations with NAIF, CMFO, all the key federal government agencies supporting these critical mineral projects. As I mentioned, our ERD went into EPA end of last week, so we're well advanced in all those processes. And then with a lot of the vendors and customers, really strong engagement. Mentioned LE System as our Japanese partner on the electrolyte side, also talking around offtake to them as well. So it's a really, really strong position as far as our support. A lot of news flow coming, a lot of work going back to that slide on the integration study. These are all the pieces that are going to come through over the next 6 months or so to deliver the integration study. And then I've highlighted in that nice pink colour end of this year is what we're aiming for a development decision. So all this comes together and we can sit down as a board and say, you know, we're on here and we're moving through into development phase. So that's our goal for 22. Deliver all that news flow, update resources, update reserves. We're currently drilling at Yarrabubba. We'll be drilling at Gabonintha later in this quarter, hopefully, and deliver all that through to resource upgrades, reserve upgrades, all culminating in that development decision at the end of this year. So we believe a very, very compelling investment opportunity. As I said earlier on, currently an EV of only $40 million. I sort of skipped over it there, but we've got an MPV on the metrics from Gabonintha of over $1 billion at pre-tax level. So, you know, it's a fantastic leverage to the vanadium price. We're going to be a very significant producer in that market, globally significant project. RCF Fund 7 coming on board has been fantastic for us to show us the pathway through to funding all this project and moving to development. We're very focused on delivery and bringing David on board, you know, David returning, very much of that focus, you know, making sure we've got the team in place to deliver the project over the next little while. And, you know, stable, great operating environment here in WA, which one day we might open to the rest of the world. And thank you very much.
Ramelius is committed to growth, both organically through exploration as well as through corporate acquisition. Along with 6 operating mine sites throughout WA, Ramelius controls prospective regional exploration tenure and is supported by a well-funded exploration budget. We welcome Ramelius Resources Exploration General Manager, Peter Rusitzka. Peter.
Thank you, Jerry. Mount Magnet. Mount Magnet's story epitomises in many ways the story of our industry. Boom and bust cycles, corporate play, fortunes won and lost. Mount Magnet wasn't the first Ramelius acquisition. And for those of you who know Ramelius, there have been many acquisitions since. But the impact of Mount Magnet on the growth of Ramelius is compelling. Read at your own leisure. This presentation does contain forward-looking statements on exploration potential. This is the outline of the presentation today. History and geology, Ramelius discovery, current priority exploration targets, exploration target generation, and lessons of the past. So I want to focus more on the exploration process rather than the results. I just want to make a key point up front. I'm a recent addition to Ramelius, so I take no personal credit for the success that I mentioned in this presentation. That credit goes to the long-standing members of the Ramelius exploration team and to my predecessor, Kevin Seymour. History and geology. Gold was discovered at Mount Magnet in 1888. And to put that in perspective, Paddy Hannon and co made their discovery at Kalgoorlie almost 5 years later in 1893. The Hill 50 mine began operating in 1934 and operated almost continuously with a few breaks through to 2007. That includes through the Second World War. Mount Magnet Hill 50 specifically, has been exploited to a depth of 1.5 kilometres and has produced over 2 million ounces of gold. In its heyday, it was the deepest underground gold mine in Australia. Total Mount Magnet historic production, 5.59 million ounces through to 2008. So that's pre-Ramelius. A low gold price environment and near surface resource depletion ceased production. The aerial photo here shows the current state of play in the project camp. As you can see, there are multiple current and historical pits and underground operations. A mature camp by any definition of the term. Ramelius acquired the project from Harmony Gold Australia in 2010. Acquisition cost was 40 million, and that cost included a mineral resource of 3.3 million ounces, an ore reserve 474,000 ounces, and a 1.7 million tonne per annum processing plant, the checker plant. Ramelius production to December 2021 was 1.17 million ounces. So that total includes over 300,000 ounces from regional satellite projects. And that highlights the strategic value of Mount Magnet over and above its endowment. Remaining as at June 21, mineral resource of 3.2 million ounces, an ore reserve of 442,000 ounces. And if you look critically at those figures, you'll see that exploration has been successful in replacing mine depletion over the last decade. Geology plan on the right there. I'll draw your attention to the folded grey-blue stratigraphy representing banded iron formation, and also to the abundant pale orange intermediate to felsic intrusions within the core of the folded dome. Stratigraphy is cut by northeast to north-northeast trending structures that are a critical control on mineralisation. The mineralisation models, sulfidation is the main mineralisation style, but brittle fracturing of intrusive hosts and shear hosted veins are also significant. These figures show the allocation of production by host rock at Mount Magnet. As you'd expect, historic production is dominated by BIF-hosted mineralisation, over 4 million ounces from the graph there. But in the last decade, new mineralisation styles have emerged. The key examples being Eridanus and Shannon. And the mineralisation styles that those two represent, the granodiorite-hosted bulk low-grade deposits and high-grade vein deposits are gradually increasing in attribution relative to the BIF production. And there's an important point here. In a fertile geological environment, gold fluids will find a way to precipitate. Don't be blinkered by preconceived mineralisation models. Ramelius discovery. The area highlighted by the orange dashed line in this figure is the Bugatti Dome. And to understand the background to Ramelius discovery, you first need to recognise that the regolith within the dome is characterised by transported cover, deep weathering and geochemical depletion, all of which have the effect of obscuring primary geology. Recognition of historical drill ineffectiveness was a key driver for systematic Ramelius drilling across the Bugatti Dome. You can see the extent of that drilling by the red symbology on this map. This figure shows production areas exploited by Ramelius, open pit operations in yellow, underground operations in green, Ramelius discovery areas shown with a red outline. Other mined areas came from extensions of previously known mineralisation. But there are two key discovery areas within the Bugatti Dome I want to mention specifically, Eridanus and Shannon. So the Eridanus open pit, relatively new pit, has produced 110,000 ounces to December 2021, remaining mineral resource of 750,000 ounces. Shannon underground production to 2021, 127,000 ounces of high grade and a remaining mineral resource of 47,000 ounces. Eridanus is a 1 million ounce discovery in a mature mining camp. These figures show the exploration timeline from 2010. The faint grey shading in the first two figures shows the location of the present-day Eridanus pit. I apologise if it's a bit hard to see. The status in 2010 was that two historical pits had been mined, Lone Pine and Thigstons. Historical 50 by 50 metre spaced aircore drilling in the intervening 600 metre interval had failed to effectively recognise the granodiorite host or the geometry. 2017, Ramelius drilled an east-west fence of aircore along the granodiorite. That fence is highlighted in yellow on the middle figure, and returned the discovery intercept of 49 metres at 1.87 grams per tonne gold. Follow-up drilling on north-south fences returned further significant intercepts, and subsequent recognition of the primary mineralisation controls within the granodiorite. The third figure shows current status. Extension of the granodiorite dike to the northeast led to additional discoveries at Orion Frank's Tower, and those plan pits are shown in red outlines there. Current priority exploration targets. Bartus East, located in the southern part of the Bugatti Dome. This long section shows some of the recent drilling. The drilling to date indicates a mineralised granodiorite beneath a superficial ultramafic veneer, effectively a buried Eridanus analogue. Results show broad low-grade intercepts with some higher-grade core zones. And read the intercepts there. They're all fairly recent at your leisure. The intriguing question for exploration is how many other buried systems are there in the Bugatti Dome? Goes without saying that your best targets are often adjacent to the biggest deposits. This long section figure shows the Saturn and Mars targets adjacent to Hill 50. They show similar controls to Hill 50, namely Biff host rocks and the same set of northeast trending structures. The potential for Hill 50 style high-grade shoots remains here at depth. And note the spacing of the deeper drilling at Saturn and Mars relative to high-grade shoots at Hill 50. You could easily fit several of those underneath there. The core here demonstrates the mineralisation model in hand specimen. We couldn't resist putting it in. Pyrite pyrrhotite sulfidation of the Biff. You can see the sulfide extending outwards from the quartz carbonate vein, and sulfidation reducing as you become more distal from the vein. Exploration target generation. So how do we maintain the exploration momentum? Well, we're acquiring new geochemical and geophysical data sets and continuously reviewing and generating new targets. This figure shows the results of a 2D seismic traverse located immediately to the north of Eridanus. The data differentiates major basinal structure, areas of likely intrusive at depth, broad stratigraphic trends, and other anomalous reflectance zones. We'll use this data to form the basis of a 3D structural framework model to evaluate new, deeper targets. Near-surface endowment of Mount Magnet has delivered a total of almost 10 million ounces. Surely the probability of further discovery at depth is high. Geochemical review showing diagnostic features for gold mineralisation at the prospect scale. On this Eridanus cross-section, an ASD feature is highlighting very precisely the distribution of high-grade gold mineralisation. We can use this data and other similar data at the regional scale for targeting. So plan view here shows ASD wavelength variation, defining two distinct geochemical domains and anomalous trends within each domain. These domains highlight two distinct ore fluid signatures, alkaline fluid to the west and neutral fluid to the east. And understanding this setting helps us predict what we might expect in each of those areas. New targets are being continuously generated and systematically evaluated using in-house prospectivity analysis. The graphs on the right show the results of that prospectivity ranking for early stage and advanced targets. Targets can also be represented on the standard pyramid, showing a relative stage of advancement, greenfields at the bottom, advanced resources at the top. Location of targets in the figure on the left. So these figures demonstrate the robust pipeline of targets that we have at Mount Magnet. Three key points to summarise today. I think number one, corporate support and a sustained financial commitment are fundamental to exploration success. Ramelius has a $32 million budget across all sites, including $14 million for Mount Magnet. Number two, exploration at Mount Magnet has been successful in replacing mine depletion over the last decade. And that fact highlights the potential of this mine camp. Number three, I said it before, but it's an important point. In a fertile geological environment, gold fluids will find a way to precipitate. The range of different mineralization styles that we see at Mount Magnet demonstrates this point. Keep an open mind on exploration models. Eridanus and Shannon show the benefit of looking outside of the box. And lastly, drill, there's no substitute. Thank you for listening to the Mount Magnet story today.
Calidus Resources is about to commission the Warawuna gold project in WA, and in parallel is exploring the area for both gold and lithium. Managing Director of Calidus, Dave Reeves, joins us now. Welcome, Dave.
Thanks very much. Good afternoon, all. Good afternoon, those watching online. Thank you for your time. Good afternoon to everyone here, a captured audience in our great state of West Australia, who chose to be here and not at Rottnest on such a beautiful day. I thought to start with, it'd be good just to reflect on our journey briefly as Calidus. We presented here 7 months after listing, back in 2017 when we listed, so first presented RIU 2018. I thought this would just be an interesting little snapshot for investors and for companies just starting the journey. We kicked off with 400,000 ounces at listing. 7 months later, first RIU, we had 700,000 ounces, obviously some good drilling. There was that sugar hit at the start. Second RIU, 1.25 million ounces starting pre-fees. We sort of went into that valley of death that everyone talks about while we completed the pre-fees, which saw us through to 2020. 2021, 1.5 million ounces, kicking the gold price, DFS completed, getting ready for, well, early works underway, a nice healthy re-rate at that point. Little bit of loss of interest as we begin the construction, and social media wasn't quite enough to entertain everyone. And here we are now on the cusp of production, 1.75 million ounces. And we're very proud of the journey so far. And it's been an interesting reflection over the last 5 years on how we've gone about pitching. If we have a look at the summary of Calidus on a commissioning of Warawuna, what is it? Well, stage one is 90,000 ounces per annum. We will be pouring first gold next quarter, all-in sustaining cost around that $1,300 an ounce. Once we've bedded that down, stage two, we'll add in the high-grade blue spec underground that's located nearby. That will take us to around 130,000 ounces per annum. In tandem with that, we'll be doing some regional exploration, obviously targeting added mine life. And we've also recently announced a joint venture in surrounding areas for lithium, which I'll take you through a bit later. Brief snapshot of the company, market cap under 300 million. I'd like you to bear that in mind when we talk briefly about EBITDAs shortly. Most recently added Kate George to our board. She's an environmentalist that's worked with us since pre-listing on the project. And we certainly believe that the ESG side is fundamental to us going forward, and to have Kate join up has been a real bonus for us. Where are we? Pilbara of WA, getting a lot better known, not just for iron ore, but obviously for gold and lithium. With De Grey and Hemi and the amazing discovery they've had out there, I think it's turned the view of gold on its head. And we're certainly very blessed to be in this part of the world. And with a couple of Australia's largest lithium mines in the Pilbara as well, it's an obvious commodity to be targeting from a base at Warawuna. Bit of a site layout before we go through a couple of flyovers, recent flyovers. Village on the south side of a range. Gold plant is almost ready for turning on, just over that range, and a mine right next to it with a tails dam. It's one big open pit to kick off with. So a very simple operation, very simple metallurgy. And that's what we believe is one of the keys to our upcoming success as we start pouring gold. This video is probably about 1 to 2 weeks old now. The rate of progress on site's been nothing short of phenomenal, with GR Engineering and all the other contractors involved with McMahon's and our own staff. And we really are building up staff on site as we transition through into operations, through commissioning coming up. But as you can see, pretty well all the structural work is complete, mechanical installation's complete. We're really up to the electrical and piping stage now, getting ready to energise power stations, and all the gensets have arrived. The ROM pad in the background, you can see that we're starting to build all stocks now, getting ready to feed the hungry beast that we're about to turn on. And all in all, it really has gone about as smoothly as you could hope during some reasonably challenging times in the last year. So that ore on the ROM pad that we're looking at, that obviously comes from somewhere, that's from the mine. So we started mining about 3 to 4 months ago, just day shift, one digger, knocking the top off a nearby hill, starting to build the ROM pad. We needed to build that up before we could put the ore on. And we'll be certainly mobilising the big diggers in the coming 4 weeks, actually. So in the meantime, we've got a couple of 100-ton diggers and Moxie fleets. This ore is outcropping on the top of these ridge lines. So finding enough waste for that ROM pad has been a challenge, and scheduling it. But we're really getting into some juicy widths of ore. Our grade controls underway, our labs up and running on site. Everything that we're seeing there is going according to plan. In the distance, you see another ridge line. We're starting preparation on that. We've divided this 2.5 kilometre long pit into 4 segments, and we're starting to knock the top off that. It's a slow process at the top. It's obviously very narrow, and we've got to do grade control, but we're getting ready for 6 to 8 months down the line when we need another mining front within the main pit. So we have kicked that off, and that's going well. Tails dam was off to our right there as well. That's all constructed. We've got about 150,000 cubes of water in there now, courtesy of some recent rains up at Marble Bar, which is a wonderful thing for commissioning and shows the dam works, which is even better. ROM pad there, we hope, well, we will have 200,000 tonnes of ore on the ROM pad when we start turning the mill. That's near enough a month's supply. And at that point, with our low strip ratio, with that ore outcropping at surface, we continue to feed from there. End of January, 85% complete. Really coming up to that finish line, and really it is about increasing our mining rate, commissioning the bore fields, tidying up on the process plant, and producing that first gold bar next quarter. On the ESG front, we announced recently as well, putting in a renewable microgrid, solar and battery. On top of that, some of the other areas just outside the carbon initiatives, in particular on the environmental, we've gone through an EPA process. We've got cyanide destruction. We're contributing to Pilbara offset funds. We've set aside some old working areas, so a long strike in an ore body as a nature conservation zone for bats. Looking to upgrade the local infrastructure, the local Marble Bar airport. So there is a lot of sides to the ESG. It's not just carbon, and certainly for your social license to operate, we see all of those as key components. Briefly on the metrics, because I do want to touch more on the exploration at the end. Stage 1, current gold price, over $100 million EBITDA per annum, 110 EBITDA per annum, bearing in mind our market cap of under 300 million. And that is only a few months away from turning on. So, we do see real value in this stage 1, but to make ourselves, more meaningful in the marketplace, stage 2 brings in the high-grade blue spec deposit 70 kilometres away from Warawuna. We've done some drilling out there, announced that recently as part of our feasibility, 4 metres at 33, 2.5 metres at 44. This is a super high-grade ore body. We're looking at trucking just under 10 gram dirt back to Warawuna. The gold spec deposit out there is open at depth, as is blue spec. And further along to the east, we've got blue spec east, imaginative naming, that we're doing some drilling, or we've done some drilling on in December and awaiting results to see if we can potentially get an open pit to start off there as a way of getting down to the blue spec ore body. In addition to that, we're looking at some parallel shears to blue spec, a kilometre away, that have never been drilled, that have all the right signatures. So we've put some holes into them last year, awaiting results. And we've done some stream sediment sampling 8 kilometres to the west over a tenement that's never seen any drilling at all. So we're pretty excited about this area for future ounces and production growth. On the metric side of that, 130,000 ounces per annum. Again, you're making over 1,200 an ounce at the moment. So you're talking upwards of $150 million EBITDA once we get stage 2 up and running. Stage 2, the DFS will be out later in the June quarter. And once we've got to steady state, we've bedded down stage 1, we'll look to commence development of blue spec to bring that in as soon as we can and get that run rate up towards 130,000 ounces per annum. So just talking a little about the exploration. So we did do quite a bit of drilling late last year. As no doubt every other presenter here has said, the lab turnaround time leaves a little bit to be desired. So we are waiting on those results, but we've drilled near Klondike, we've drilled near blue spec, we've drilled 20, 30 kilometres away up at Marble Bar on some areas on what was a relatively limited budget. You do want your focus and your money going into development when you're building, but now we're almost at that commissioning phase. We can turn our attention more to adding mine life, and that's certainly the remit of our exploration geos, is go out there, have a good hard crack in the next year or two to really add some mine life. In addition to that, we see a lot of opportunities. There are both JORC and non-JORC compliant resources within an easy trucking distance, and we are the only mill in the East Pilbara in that area. So we do see a lot of upside in regards to doing future deals, satellite deposits, and increasing that mine life at Warawuna over time. Round Klondike itself, in the coming year, we'll be doing drilling along strike to the west of the main pit. Klondike Boulder, it's called. It was the second largest producer. We've never, old mine in the sort of 1900 era. We've never drilled around there. So we're going to put some holes into that. And then we're going to step out on some of these other targets. Some we drilled last year, but we've got a whole lot to follow up on this year from our various geophysical studies on radiometrics. Just talking a little bit more on lithium, seeing this is a recent announcement and one we're certainly excited about for adding shareholder value. We've done a 50-50 joint venture with Haoma. We've put in tenements, Haoma's put in tenements that covers a lot of the East Pilbara. In particular, we've targeted rocks that are known to generate pegmatites and lithium in that part of the world. When you have a look at where Wodgina is, Pilgangoora, the major lithium mines, they all have some pretty common themes, in particular the age of the rock, the split rock supersuite. So we targeted those areas with Haoma and said, you really need a critical mass when you're approaching this, rather than everyone doing their own little piecemeal area. Let's combine, let's make something really decent out of this, give us maximum chance of success. And that's what we've done with them. We've now got geologists on the ground kicking off exploration. We're seeing everything we want to see in the early stages of exploration. And we certainly believe that this will have a potentially very worthy value add for our shareholders over the next year or two. It is going to be manned separately from our gold side. Gold remains a focus for us. Commissioning, pouring the first gold, getting to steady state and starting that increase in production to 130,000 ounces. That is our core, but we certainly see the lithium side adding value, and at the appropriate time, we can look what to do with that, be it demerge and list separately, be it a sale and passing proceeds through to shareholders. But we are very excited about the possibilities that we see with lithium. Very quickly on timelines, we've only got a couple of boxes left to tick, and that's really to produce the gold now and announce that feasibility. And as I say, that is due on next quarter. We are on time, on budget, and an absolute credit to everyone involved to get there in what I have said is challenging conditions, be it floods up at Marble Bar, through COVID, through labour shortages. They have done an absolutely phenomenal job. So in summary, stage one, again, that gold bar, I can almost feel it. It's just around the corner. Bed that down, increase production with stage two, get some really good cash flow coming into the company, use that cash flow to grow our mine life in the gold, use that cash flow to explore for lithium and grow value for shareholders while we decide what to do with that, and use that cash flow to potentially add a second operation. We certainly believe in de-risking from a single asset operation into at least two, and we believe that the next 2 to 3 months is going to be incredibly exciting, but really that's just the start of the journey for Calidus. And we look forward to being here in the years ahead and see how we go with all of these aspects to us. Thank you very much.
AuTECO Minerals is a Perth-based gold exploration company that's rapidly growing the Pickled Crow deposit in Ontario, Canada. With one of the highest grade undeveloped gold resources globally, we welcome Chief Operating Officer Darren Cooke, who will present an update on recent exploration activities and the exciting plans for AuTECO. Darren.
Thank you very much. And it's a great day to be here for AuTECO, big milestone in our history. Today we put out our resource update, which now stands at 2.23 million ounces at a staggering grade of 7.8 grams per tonne. So that's been the culmination of a lot of hard work from the team on the ground. And it's a pleasure to be here to present the story and really explain why this is a compelling growth opportunity. So look, introduction to AuTECO. We're a Canadian-focused ASX-listed explorer with one of the highest grade resources globally. And we have an exceptional growth trajectory. So we've consistently been adding resource ounces, but the growth has not stopped at this point in time. We're in a great location. You probably would have heard the term Tier 1 bandied around quite a bit today, but this truly is a Tier 1 jurisdiction over there in Canada. And the project has a long history of producing high-grade gold. So if there's ever any question marks about whether there is a project here, there's 1.5 million ounces of gold in bars sitting there showing that this deposit is mineable. During that time, they mined at an incredible grade of 16.1 grams per tonne. We've had low cost and very rapid resource growth. As I mentioned before, we're up to 2.23 million ounces of gold now. But what is staggering, and I don't think there's too many stories around that have grown such a high-grade resource in such a quick period of time. In the last 16 months, we've added 1.23 million ounces of gold, and that has come at a cost of $17.58 per resource ounce. So, you cannot buy gold ounces that cheap, especially not at that higher grade. Prospectivity, we have 500 square kilometres of ground in the Uchi sub-province, which is one of the hottest exploration properties globally at this point in time. For those that follow the Canadian junior space, you would have seen recently that Great Bear was acquired by Kinross for over $2 billion Australian, and we're in the same belt of rocks that host the Red Lake deposits as well. And the infrastructure, this also sets AuTECO apart because we have means and the infrastructure to fast track commercial production here at low cost. Just the corporate overview. Our market capitalization is around $160 million mark. The share price has been jumping up and down a little bit, but as I say to my team on the ground in Canada, doesn't matter what the share price does, we're going to keep focusing on delivering results. One of the great things about this register is that for a junior explorer, we have a great institutional following. 29% of our register is institutionally held. So obviously 1832 is the biggest one there with nearly 10% of the company. But we have some great names like BlackRock, Merck, and just recently Franklin Templeton have just joined the register, taking a 3% stake in our company. So to have that backing for a junior at this stage is very impressive. The board and management, I won't spend too much time on this. There's a lot of familiar faces here. Basically, the entire board has been involved with Bellevue. And when they acquired this asset, they saw a similar growth trajectory that this deposit could undertake. And we've seen how good a job the guys have done with the Bellevue deposit. And myself, obviously from Northern Star also, and have been on board with AuTECO for the last year. And what a year it's been. We've drilled a lot of meters. We've drilled nearly 90,000 meters in the last year. So we've been very, very busy. So one of the questions we often get asked is, why Canada? What's an Australian junior doing in Canada? Key thing we want to realise is that this is one of the best jurisdictions globally. And when you look at the Fraser Institute rankings, Canada ranks up there consistently with Australia. So it's a great place to be. We can wake up in the morning knowing that we still own our gold deposit. Ontario itself, very supportive of mining and a great place to operate. And there are strong taxation incentives over there. So we are investigating the possibilities of flow-throughs, even though that we're Australian listed, it is potential. And what the flow-throughs mean is that instead of raising capital at a discount, you actually raise it as a premium and sell the tax loss off to other people. So that's a great incentive by Canada. I wish our government had the foresight to do the same thing here in Australia to boost the industry. Prospectivity, it doesn't get any better. Some of the biggest deposits are located in the same belt of rocks that we're in. I mentioned Red Lake before. And the key thing about Canada is there have been some world-class discoveries in very recent time. And I've spent a lot of time on the ground over there now, and I can understand the prospectivity over there. And look, the relative valuations, that's closing up a bit now. But one thing that we did notice was there were price and valuation discrepancies between some of the TSX listed projects compared to what you see in Australia. So we're pretty happy to be operating in Canada. So just a little bit more detail about the asset. We're located 400 kilometres north of Thunder Bay, which is a big town, 110,000 people, and it is a mining centre. We have 500 square kilometres of tenure under management, which is the best part of the Northern Pickle Lake Greenstone Belt. And in terms of the ownership, we are in partnership with First Mining Gold. We have a 70% equity in this project, but we can, progress to 80% ownership for a payment of $3 million Canadian at any time. At the moment, we're choosing to put our capital into the ground because when we're discovering resource ounces at $17.58 an ounce, we can create huge amounts of shareholder value by investing in the ground. And that's really the philosophy of our company, grow through the drill bit. We've got very low G&A. There's only, I think I'm the only full-time employee in Australia, and the rest of the employees that we have around are either based in Canada or are part-time, if you like. Mentioned before the historic mining, 1.5 million ounces at 16 grams per tonne is an exceptional deposit. It is one of Canada's highest grade historic producers. There is 3 shafts in the main mine area, 2 of which are more than 900 metres deep. And there's 40 kilometres of lateral development also. And as I mentioned before, we've got the resource growth that's up to 2.23 million ounces at a grade of nearly 8 grams. And it does remain open in all directions, in all areas. So we are very confident that the growth will continue. One of the other things that sets us apart from other emerging projects and other emerging prospects, if you like, is that we've inherited a mill. So this is a pathway to get low-cost capital production started. All right. So at the moment, it's a typical Canadian story, very small, 225 tonnes per day. These aren't photos that are pulled out from the archives. These are photos that I took in September last year when I was on site, and you can see it is in very good condition. And we've had Ausenco out there on site to do some work for us on pulling it apart to see, okay, doing some scenario analysis, what would it cost us to get this thing up and going? What would it cost to expand it? With a view to looking at a startup that will generate early cash flow. Won't be the end game, but it's certainly a kickstart for us. So if we were to upgrade this thing to 900 tonnes per day, gravity circuit, add a CIL onto it, we can get that done for under $40 million. So that's a great start to get it into production. It's not where we're going to be in the end game, because as we drill this deposit, the more we drill, the more we find. So we know we're probably going to need a mill bigger than that, but this is a way to almost become a self-funded explorer, if you like. So help pay for some of that development by utilising the infrastructure that we've inherited. In terms of the geology, it is one of the best addresses globally for gold assets. So you can see where we're located. What you can see there is the superior Craton, very, very similar to geology to what people in the room are familiar with in the Yilgarn Craton in Western Australia. So this Craton, Archean in age, it's broken into numerous structural belts, as the Australian Yilgarn is. And when you break that down, we're in a belt called the Uchi subprovince. And the key takeaway from that is that that is one of the best endowed belts in the Archean and in Canada in particular. So our neighbours, Red Lake, Musselwhite, Springpole, Madsen, Dixie and West Red Lake. So there are great operating deposits in this belt of rocks. And as I mentioned before, with the recent exploration success of Dixie, which is the Canadian equivalent of a De Grey, there is a lot more interest in this particular zone. The geology itself is really, really interesting, and this is where there's a big opportunity for us. What we've found as Australians, we've gone in and taken a system-wide approach to this. So we're looking at the camp scale expressions of this deposit. And what we're finding is we have a big world-class system on our hands here. The deposit, very familiar in terms of it's a narrow vein mesothermal orogenic system hosted in basalts and various shades of sediment with a number of different styles of intrusions. Historically, the mining and all the exploration is focused on our high-grade quartz veins. So when you think of these quartz veins, think of Kundana, think of Lawlers, think of Agnew, those sort of things. So it's a very high-grade deposit. And obviously, it's also very similar to what the guys are working on at Bellevue, which is great. But you can see there, all of the gold that was mined here historically was from these high-grade quartz veins. They're low sulfide content. In fact, the historic gravity recovery was reported at over 95%. So I know someone mentioned before gold falling out of quartz veins. It's the same here. These things are fairly consistent and amenable to selective mining. And you can see on the side here some of the results that we've had in the last campaign that we've drilled, which is our 50,000 metre campaign, 7.3 at 33.3 grams per tonne, 2 metres at 68. So there have been some sensational high-grade results. What has been overlooked historically, though, is the alteration-hosted mineralization, which is typically hosted in banded iron. So what happens there, the quartz veins and the fluids go through the banded iron, they react with the iron-rich minerals in those rocks, and they deposit sulfides, and these sulfides contain gold. So this has typically been seen as a narrow vein deposit. However, what I can't stress highly enough is that there is the potential for bulk mining here as well. And you can see some of the results that we've got in this latest drill campaign. Also, 20.4 metres at 5.3, 19.5 at 33, and so on and so forth. And it really does show that this is more than a one-trick pony. It's not just narrow veins, but there is the potential for bulk mining there. Some of this material is quite close to the surface, and there does appear to be open pit potential. So we're going to really assess that in the next coming campaign period, which will be 6 months. So just to express the philosophy and how we've achieved this, because we get a lot of questions about how you've gone about this. And, the old saying that Bill Beeman used to have when we were at Northern Star was, if you don't drill, you don't find. We've added 500,000 ounces in just 6 months, which is pretty amazing. Very steady growth trajectory. But this slide really does sum up how we've done it. So the historic data that's informed the model, there was 170,000 metres drilled in the 85 years between 1935 and 2020 when AuTECO gained management control of the project. In just 2 years, we'll have done 100,000 metres. So any question marks as to where this resource growth has come from, it's from the drill bit, all right? And you just look at the history of what we've added, it is amazing how consistent it is, and the resource remains open. And to do it at just $17.58 an ounce is amazing. So I would challenge people to go and find a growth trajectory like that, at that sort of grade in any project globally at the moment. So we expect this growth to continue. And just to put that into context, what I wanted to show in this slide was all the resources exclusive of reserves. So this is where the next generation of reserves are coming from. And you can see there in Australia, Canada and US, so the true tier 1 mining jurisdictions, there's 130 of these 2 million ounce plus resources, and only 18 of them are above 4 grams per tonne, and Pickle Crow's in the top 10. And even our lower grade BIF is pretty good grade compared to global averages. And, you know, you can see what's happened with Bellevue. That would have been on this graph previously, but they've converted a lot of their resource to reserve. So like I said, this is where the next generation of reserves are coming from. And now you can see how we compare to those top 20 2 million ounce projects in terms of grade. We're in some pretty elite company there. And now that we've actually hit that 2 million ounce mark, we are becoming globally significant. All right, so look, just in terms of the growth pipeline, you know, we have done a lot of work across all areas there, from the generative side to the discovery and the resource growth. We have 5 rigs turning on site at the moment. So we are still continuing to invest very heavily in the drill bit. But you can see there we've had some excellent discoveries with Tyson and Carey. And those results up there on the resource growth side, they are all outside and not included in our 2.23 million ounce update. So there is more growth to come across all aspects of the pipeline. Tyson discovery was another one that really did break the paradigm. We found a new vein array in an unfamiliar rock type. It'll be a really familiar story to a lot of people in Western Australia. Exploration model focused exploration. They'll only look in the mafics, only look in a particular rock type. But when you break that paradigm and actually go and have a look outside, you find there's gold in a lot of different type of rock types. And we've done the same thing over here. So we've got a conglomerate unit and a porphyry unit. The drilling was mostly focused on the mafics, and we're discovering good, consistent veins well away from the old workings. And just to finalize, you know, the final message that I would have is, if you're in AuTECO just for the resource growth, then there's another string to our bow that people and investors really need to appreciate. And that is the regional exploration potential. That graph there that I showed previously, the 1.5 million ounces that was mined historically, our 2.23 million ounces of resource, all comes from within inside that green box. Very constrained area, all the work we've done. And we have just sent 3 of our 5 drill rigs out to the more regional targets. Typically with these shear hosted systems, there's parallel structures that are mineralized, but all the exploration was primarily focused on the core mine shear. So when you look at the historic data that we've inherited, there's some ripping results well away from our resource. You know, things like 4.6 at 7.2, 36 meters at 1.5, 14 kilometers away. So we're really looking forward to the discovery potential that we have, and you'll see results coming out for that in the coming months. So feel free to come and see me at the booth. There's a lot to get through. It's a great story. I'd love to share more about it, but you can see our key objective for the next few months. We're really looking at continuing to grow the resource, continuing to drill. You know, we're going to remodel the ore body to get the open pit potential assessed, and also our production to pathway opportunities. You've seen we've looked at the milling information. We're looking at ways to get underground to drill this thing out. So thank you, and I hope people enjoy the rest of the conference.
Just a reminder, speaker, when you hear this, it means stop. Hot Chili is a standout major developer. The large-scale Costa Fuego copper hub comprises two major copper deposits, Productora and Cortadera, containing 2.9 million tons of copper and 2.7 million ounces of gold, lying just 14 kilometers apart and within 50 kilometers of port, making it one of the lowest altitude major developments in the Americas. Christian Easterday is Managing Director, and he joins us with his story. Welcome along, Christian.
Thank you. Well, thank you very much, everyone, for joining me. This is now at the 3-year mark since Hot Chili took on the Cortadera acquisition and transformed its development projects on the coastline of Chile. Pushing forward now on a large combined development called Costa Fuego. Now, normally I would have an interesting narrative at this talk, but perhaps title my slide with size is everything, but we went with timing is everything because that's really what this has become, a very long investment to finally be positioned right at the front of the queue of the next major copper developments globally. So at the moment, in the next 5 years, we don't have or don't see a lot of new large-scale copper mines coming into production, certainly none outside of the majors. Hot Chili and Jose Maria Resources are the nearest term large-scale copper supply to come to the market at over 100,000 tonnes per annum. So I guess what we're going to talk about today is an update on the project, but most importantly, a year of significant achievements that has really put us in a position that we haven't been in for many, many years. We've attracted the support and backing of Glencore. Our ESG fundamentals on the project are really setting us apart from the other large-scale copper developers in the world. And most importantly, we have a really, really strong thematic behind us, which is a growing copper price against very few large-scale projects becoming available. So 21 was a very, very big year for Hot Chili. We invested heavily in drilling at Cortadera since the maiden resource came out in October 2020. Some 52,000 more meters of drilling have gone into the deposit. We kicked off a pre-feasibility, started reshaping the management group, reshaping the board, and seeing that strategic investment by Glencore in the company in August of last year. That allowed us to take out the ownership over Cortadera. We completed a consolidation of the paper on issue in Hot Chili, and we also completed a very lengthy process to be able to finally list Hot Chili amongst the other senior copper developers in the world on the TSXV. And what that puts us in a position is a very tight capital structure, a project and company that's backing about $160 million market cap, 34 in the bank, another 11 million coming in during the year, and a growing number of institutions coming onto the register from North America. Our top 5 shareholders seeing over 37% of the consolidation on the register, but most importantly, finally an 18-month pathway to drive this deep into definitive feasibility and towards project financing. So we are positioned amongst the largest copper mines in the world. Chile, 7 of the largest 20 copper mines in the world. This is where the copper comes from. It is large-scale production. To give you an idea of how much production you need annually of copper to be in this group, that's somewhere a bit over 340,000 tonnes of copper annually. Or to put that in layman's speak, at the moment, with copper sitting around 10,000 tonne, projects that pour about $3.5 billion US of revenue a year just on their copper alone without their byproducts. So we are studying a scale project at Costa Fuego that's at pre-feasibility level now. It's around 100,000 tonnes of copper production and around 70 to 80,000 ounces of gold, along with some silver and molybdenum credits. And we're looking to establish a 20 to 30-year mine life on this project. And those catalysts are about to be on the company, and certainly we're looking to push into a definitive feasibility in the latter part of this year. So we have about 2.9 million tonnes of contained copper in our existing Costa Fuego global resource, separated between Productora and Cortadera, 14 kilometres away. About 2.7 million ounces of gold, and S&P just rated the company outside of the majors as the 6th in the world as undeveloped copper resources in a low-risk jurisdiction. And really, it is the fact that we are the only low-altitude play in this space that is seeing near-term production horizons. And I guess what's really exciting about this is 15 months of drilling, and in the coming weeks, we'll see what that does to that upper tier 2 resource base. There's a few keys to success in big copper. Time is probably the most important one. These projects need to be brought on at the right timing in the copper cycle to be built and to contribute towards a growing supply gap. At the moment, the annual market is somewhere around 23 million tonnes of copper consumed each year. It's the second largest metal market in the world. It overtook gold over a year ago. Gold has now been overtaken by aluminium and is fourth, and sits just behind iron ore. So it's about bringing one of these large scale things on at the right time. It's about grade. Costa Fuego is in the top 5 by grade in these large scale projects undeveloped. It's about having doable projects that are large open pittable projects, not having to go to massive scale undergrounds in hard to develop jurisdictions. It's about getting a few free kicks with metallurgy, not having to use fresh water to process, being next to the coastline, having infrastructure, and being at low altitude. All of these things play into building a multi-generational large-scale copper mine. But most importantly, it's about hitting your straps at the right time when the copper price is doing great things. So location. This has always been one of our strengths. It is about what I've just spoken about. It's about being in Chile, one of the top 3 mining countries of the world, and having the infrastructure and low altitude to develop a large-scale copper mine amongst the largest in the world. Cortadera, we'll focus on this and just take you through what's happened over the last 15 months. We saw a 450 million tonne resource established in a very short time frame from when we signed the deal 3 years ago to acquire this private discovery. We were producing world-class drill results quite quickly. The resource and the maiden resource came out quite quickly, and now we've really doubled down on this deposit, more than doubled the amount of drilling into it, and we sit just in front of a material resource upgrade to the entire super hub that we're developing. So I guess a year ago, we were showing pictures like this, 3 separate porphyries on the discovery, 2.3 kilometre window. So this is now been updated. We've had 3 drill rigs drilling at this for the last 15 months. And of course, the team at Hot Chili's being led on the geological side by Dr. Steve Garwin as we've expanded this deposit out. We now look at the window as a linked system, low grade really covering all aspects of the entire window. And I guess the drill results have continued all through last year to position us with quite a number of the world's best drill results in the copper space. When we look at the previous long section of the deposit back in October 2020, you can see we had about 40,000 metres of drilling into this, sitting on already one of only 2 major discoveries made in the copper space since 2016. And we had a large high-grade core on the main porphyry, Cuerpo 3, which extends through the surface. I think I joked last year that it was quite phallic. Luckily, our geologists have put a lot more drill holes into it and really filled out the high grade now on Cuerpo 3 and also at the other 2 porphyries. And we've developed a new higher grade core at a grade above 0.6% copper cutoff grade. So these are the resource wireframes now that are now getting estimation by our team, and we'll sit in front of a major resource upgrade in the coming month. We also developed quite a lot of high grade over the top of each of the deposits. A lot of continuity was shone through, and overall the system started to link together. This is just looking down on Quepo 3 at the main porphyry. This is not going to just be a large open pit on this porphyry, but this will support a cave operation below it, focusing on this high-grade core and higher grade core, which we've just defined, material around 1% copper equivalent bulk tonnage. You can see the dimensions that we've closed up there on the original lighter red high-grade core. It's sitting at about 500 meters by about 400 meters in dimension and extends for 1 kilometer from surface. So this will really feature in extending the resource to reserve conversion. And I guess in a very, very exciting part of our story is finally Hot Chili is in a very strong position with strong cash in the bank, pushing into definitive feasibility and really now having the opportunity to go and explore our land holdings. Within about 4 weeks, we'll have, or 4 to 6 weeks, we'll have 3 drill rigs on the ground. One of the targets there that you're just looking at is a large target that we've defined right next to Productora. Initial holes are going into that and results are pending. But we have 12 of these large scale targets. This is one of our lower risk targets, and we'll move through those throughout the year. I'm really trying to define whether Productora and Cortadera have another brother in this large super hub which we're developing. And of course, we want to know that sooner rather than later before we finalise on scale going into the definitive feasibility. We'll also be exploring finally outside of the Cortadera discovery window. So I mentioned, we signed this deal 3 years ago and we've had 2.5 years of drilling on it. That's just been in that 2.3 kilometre box, and it's delivered those type of tonnes on metal. And I guess it's going to be very exciting to finally step down the valley to along strike targets on that host structure, north and south onto larger targets which we defined and put first drilling into these areas. So the exploration budget is quite healthy this year for the team, and we're looking forward to some success on that front. So as I mentioned, deposits like Cortadera don't come around very often. Rio Tinto's Winu discovery, which you don't hear a lot about these days, was made at about the same time as Cortadera was released. I guess Cortadera has continued to drive very strong drilling results as we continue to expand that deposit. And what that really features in is Hot Chili being very, very entrenched in the top 20 undeveloped copper projects of the world outside of the majors. We'll be moving up that table very shortly. So it's not just about size, it's about where you position with grade, it's about having no arsenic in your concentrate and being able to develop something on the coastline of Chile with infrastructure. And most people know that Hot Chili was very, very keen to get over the TSXV, 5-6 months of working through that to position ourselves against all of the remaining senior copper developers that you saw on that previous slide, all of them residing over in the TSXV, and some of them which you can see there supporting $1.3 billion market capitalizations of very, very similar results in places like Argentina or Ecuador. So on a value parity basis, we're about 4 to 5 times out of the money against our North American peers. We've been on the TSXV for about 1 month. To be honest, I think the company has been catching its breath a little bit, but we're very much looking forward to a very strong marketing effort over to the North American institutions over the coming months as we deliver our next milestones and looking to bridge that valuation gap. So 2022 looks to be as momentous as it was last year. Last year was about de-risking and positioning. This year is about delivering and delivering into what we say we're going to deliver. So we have 18 months of growth and development funding available, 3 rigs on the ground, a resource that'll be out before the end of the quarter. Really importantly, a offtake agreement with Glencore that will provide us with an offtake partner on the sales of our benchmark component of copper concentrate that'll go out in the world in 2026. So we're looking to secure that agreement that will allow Glencore to handle 60% of our production for the first 8 years of this multi-decade project. And in addition, the last final piece of our infrastructure puzzle, an existing port built right next to the project. We'll be looking to secure a definitive agreement to secure that entirely for Costa Fuego. Our pre-feasibility will be out at the end of the year. And I think that we'll be demonstrating something that when you add 1 and 1 together, that hopefully the equation will be more than 3. So very, very much looking forward to kicking off our feasibility work at the end of the year and commencing our financing run towards building this as one of the new emerging large-scale mines of the world in the copper space. So at the moment, I guess we sit here with a very, very significant investment opportunity. These projects take 18 to 21 years to develop, from exploration, discovery, through to production. And that's a very, very unsexy timeline. But when you're at the 12-year mark and you look around at everyone else and you realize that there are no other projects of scale coming into production in the next 5 years, and copper prices at $4.50 a pound, and you run the numbers on this project and you say, well, we're going to have a 20 to 30-year project putting out plus $1 billion US annual revenues in the order of 300 million to 400 million profitability at those kind of pricing levels. You get to start to see the picture in terms of the undervalue that is about to be bridged. We have a very, very low economic and time hurdle to development, and that's really all about timing. So backed by Glencore, with resource catalysts in front of us, with a top 10 low risk undeveloped copper project in the world, very much looking forward to quite a lot of growth in the stock and in the share price over the coming year as we push in towards building this thing. So thank you very much.
That takes us to lunch. We'll be back when you hear the bell ring.